what I was going to do is just the overall basic overview of credit reporting and credit scores and how they're made up and what you can do to help your score to improve, and what you can do if you find mistakes on your credit report. Kind of just go over the whole credit process. So what is a credit report, and where does it come from, and how does it work? So fact or fiction, having access to credit is a consumer right. That is fiction. It's really not a right. You don't have to have access to credit. Credit is definitely, the choice is yours. A lot of times when I am in high schools doing classes, I'll have students that will say, I do not want to ever have a credit card. I don't want to borrow money. You know, I've seen too many people have problems. But as we know in our world today, it's pretty hard to get by your whole life without borrowing money for either a car or a home, you know, or making some kind of purchase. So the choice is yours whether or not you want to build your credit and borrow, or if you want to try to just pay by saving. So obtaining goods and services and paying for them at later dates, credit card, mortgages and car loans, service contracts with cable TV and utilities, and all of your financial references, those are all the things that are dependent upon having good credit. The three main credit bureaus that keep track of all this information are Experian, Equifax, and TransUnion. So those are the credit reporting agencies, and the purpose of having them is to keep track of everything. They make credit instantly available to lenders. They're lower cost credits. They're nationwide, so that no matter where you go, you can apply for a loan and all of the information will be readily available. So how it works with the credit cycle is you pay the lender. So when you get a loan, you pay the lender. The lender will update their records. So you have a mortgage at Chelsea Groton, you make your payment, the bank updates on their system. Then we give all the information about the payments to the credit reporting companies, and they keep track of all of that information. And then they take the information and give it back to the lender when there's a request for somebody comes in to get a new loan or wants additional credit. So that's how the cycle starts. So the cycle starts pretty much with you and making your first payments, and then that gets reported. So the players in the game are the credit reporting companies, the lenders, the risk score modelers. They're separate from the credit reporting companies, and you probably have heard of things of credit scores and Fico scores and all of that. Those are the modelers. They're the ones who come up with the formulas for those particular scores. And then the government also reports things to the credit bureau and keeps track. So if you don't pay your taxes, that's going to show up on your credit report. If you have a judgment against you, that will show up on your credit report. And then you're in the center because you're the one who kind of initiates all the other agencies for their reporting. So fact or fiction, credit reporting companies decide whether an application should be approved or declined. Fiction. Fiction. They really have no determination at all whether or not you're approved. They just provide the information, and then the lender is the one who makes the final decision. So under the Fair Credit Reporting Act, the people that have permission to check your credit are anyone who wants to open or manage your credit accounts, offer you credit, employment purposes, underwrite insurance agencies, business transaction, the federal court can do it, investors, governments, and if any disclosures have to be made. So there has to be a reason to pull credit. I couldn't just sit here and say, oh, I'm going to decide to go back to the office and pull credit on 3 of the people that came to the seminar just because I thought, they might be a good prospect to offer a loan. You would have to apply. Or if you're an existing customer and we want to give you another offer, those are times when credit can be pulled again. But there has to be a reason. A lot of people don't realize that a lot of employers now pull credit. So it's really important to have good credit when you're applying for a job. And if you don't have good credit, a lot of times that can be a reason why you don't get the position. So that's really important. Insurance, if you're going to rent a property, people don't think that that is a reason, but now landlords will pull credit to make sure that you're a good risk. And if you had really poor credit, they might not choose to let you have that apartment. So your credit report is your personal record, and on that credit report has all the history of your past credit dealings, but it also has quite a bit of other information about you. It also has all of your identifying personal information. So when you look at your credit report, the first part of it's going to have your name, your address, your previous address, your employer, your previous employer. All of that personal information pops up there too, your birthday. All that information, your social security numbers, part of that, comes up first. The other information is all about the accounts that you hold. So that would be any of your loans. If you have a car loan, if you have a credit card, if you have a student loan, all of those things pull up under account information. Another thing that pulls up that people don't realize is will pull up if you have a collection agency calling you, or for example, if say you have an account with Verizon and you decide you're going to cancel, but you had a contract with them and you said, well, you know, they give me bad service, I'm not going to pay that contract fee. And you go on to a new carrier and Verizon tries to contact you, you ignore them, and they go to a collection agent. So now the collection agent is calling you. And if you ignore them, once a collection agent gets involved, it gets reported to your credit report. So if you go along paying Verizon every single month and without a hitch, it's not going to show up on your credit report. But as soon as you stop paying them and they have to get a collection agent involved, it shows up on there. So a lot of times, especially younger people that have gotten trouble with their cell phone and then later in life move on to go buy a house, that'll pop up on their credit report that they owe a collection agent money. And a lot of times hospitals are another thing that show up under there. If you have a hospital bill and you're having trouble with your insurance, and it might even be something that you really don't owe, but you haven't got it resolved and the hospital ends up going to a collection agent to try to, collect the money, that will show up on your credit report. So there are some other things other than loan payments that will show up and can cause, a problem with you obtaining future credit. Public record information, what that is if you have taxes, if you have a lien against you by the government, if you went to small claims court and didn't, ended up owing your landlord money for some damages they said that you did, and that would show up on there. So lots of little things can show up under the public record information. And then inquiries show up under there. Does anyone know what I mean by inquiries? What inquiries are is every time somebody pulls your credit, it shows up under there. If you just pull your own credit, that doesn't show up. But if you go and apply for a loan at a bank, it will show up on there. If you go to get a new car, the car dealer will show up on there. The good thing is now, it used to show up that you might, if you're shopping for a car and go to 10 dealers and each one pulls credit to give you an offer, they would all show up on there and that would be held against you. But now what happens is if you're shopping for a particular product, so you're looking for a car and you get your credit pulled 8 times, it'll only show up as one inquiry under the auto industry. So same way as if you're shopping for a mortgage and you go to a mortgage company, a bank, and 2 different banks, it will only show up as one pull, and that goes for 45 days. So you have 45 days to shop around before it starts to show that you have multiple inquiries. And then also has dispute instructions down at the end too, that if you find something wrong on there, how you can go about resolving that. When you want to get your free credit report, which I don't know, have all of you gotten a credit report and checked it out? You want to try to do that every year. It's free, and if you go to annualcreditreport.com, that is the site that you can get it free. If you find a dispute on your credit report, it will give you instructions there, but there's also the website of the company. You want to go to them, and then you can file the dispute right online. You can do it in writing or even through the telephone too. So you want to report anything that's not accurate on there. A lot of times somebody who has a relative with the same name, some of their credit information can pop up on your report. Sometimes there's just a misposting. Sometimes you've paid something and for some reason it didn't get reported that it's paid and it's still showing up on there. So the credit bureaus have 45 days to look into that and to respond and to get back to you. They will make sure that all the information that they'll follow up on the information that you sent them, and then they'll correct it on the report. Consumers can add a statement, a dispute. So say you found, that you thought something was wrong and they couldn't prove it. You do have the right to put a dispute letter on your credit report so that if anyone ever pulls it, the letter's there. You can also put that letter on there too if, say, you had a period of hardship, you lost your job, and so there was a brief time where your credit didn't look as good because you missed a few payments. You can also put that, attach that letter right to your credit report also. And it's not a guarantee that a lender will make an adjustment for it, but at least you have it on there. Okay, fact or fiction. Paying a collection account will reset the 7-year deletion period. So say you didn't pay on your auto loan and you went years and owed money, and then you finally went back and paid it off. Will it automatically pop off your credit report? No. It's still going to stay on there. This is a pretty good table here that shows how long things will stay on your credit report. So open accounts in good standing. When you open an account and it's in good standing, you have a Visa, you've always paid it on time, it's going to stay on there forever. Closed accounts in good standings will stay on for 10 years. So you decide that you're going to close one of those Visas. It'll stay on there for 10 years, that you always paid it on time and had it for 5 years, and then it will pop off. Late or missed payments will stay on for 7 years. And a payment doesn't show up as missed till after it's 30 days past due. So when you get your Visa bill and it's due May 15th, and you pay it on May 16th, you misplaced it, you find it, you panic, oh my gosh, it was due yesterday, you pay it on the 16th, my credit's going to be ruined. It's not going to show up on your credit report till it's 30 days late. So if it was over a month late paying it, then it would show up as 30 days past due. So if you're just a couple, not that I recommend it, because then you're going to have a fee and all sorts of things like that, but it's not going to show up on your credit report till it's 30 days past due. So they're going to stay on there for 7 years. Collection accounts, those were the hospitals and the people looking for phone bills and things like that. They're going to stay for 7 years. Judgments, bankruptcies, 10 years. Chapter 13 is 7 years. Tax liens, 10 years. Paid tax liens, after you even pay them, it's still going to stay on for 7. And then credit inquiries for 2 years. So those are the standards. Now, you're probably saying you've seen commercials on TV or somebody who said, well, we can fix your credit and get things off quicker for a fee. There are some ways that they can, and legally, get things off a little bit quicker, but there's some tricks and things involved in that. So really, that's pretty much the standard. So, usually you have to just wait the time. These are things that would never be reported is criminal activity. So if you have a speeding ticket, it's not going to be reported on there. Medical information, your buying habits don't show up on your credit report. None of your assets will show up on there. And your credit scores don't show up on your credit report. And that's, a lot of people are fooled by that. They think when they get their free credit report, it's going to have their scores on there. But then they'll be asked later to pay an additional amount to get their credit score. You must give permission for your credit report to be accessed. Do you think that is fact or fiction? Fiction. Under some circumstances, you have to give permission. When you apply for a job, it's usually, if they're going to pull it, it's part of the application you sign, and they'll tell you then. But when you apply for a loan, a lot of times it's part of the loan application. But other times they can pull your credit if you are an existing customer, and they might want to make you another offer, or I don't know, see how you're doing. If you're a big commercial customer, then they can pull it once you're an existing customer. So they don't always have to have your permission. Some of the myths about credit reporting is that once the debt is paid, it will go away. And that's what a lot of people find, hard, is that they'll work up, save the money, pay that past debt, and just hope it's gone, but it's still, all that times that I showed you, is going to stay on there. The credit reporting company cannot deny you credit. That's just for the lender. I'm not responsible for those charges. Oh, this one's an interesting one. A divorce decree separates joint accounts. A lot of people have problems pop up with their credit because they maybe have a joint account and get divorced, and maybe their spouse is off using the credit card because they didn't cancel, their divorced ex-spouse is using it, and then it's still going to show up on your credit report too, as long as it's joint with, it's joint account. So if you had joint accounts and you no longer were with the person you opened the account with, you have to close that account and get your name off of it. Otherwise, it's going to continue to follow through on your credit. Consumers must give their permission. Requesting your own report and pre-approved offers will harm your credit history. No, you can request your own report as much as you want, and it will not harm your credit at all. And there is only one score, and it is on every report. That's also a myth, and we're going to go over our credit scores in a minute. Rebuilding your credit report and keeping it in shape for when you need it. Really, the most important thing to having good credit is to paying your bills on time. That is like the biggest thing and will make your credit report the best. A lot of people wondered about rent. Is that going to help or hurt my credit? Do you think that paying your rent on time can help build your credit? I see people saying no. This is a trick question because it can. And that is fairly new in just the past year. What a consumer can do that's paying rent is you can request your landlord to start reporting it to the credit bureaus. And so now you'll show that you have have a good payment history. So paying on time, not having any bad checks, fulfilling your leases, and will definitely help with the renting side to build your credit, which is a really great thing because, as you can see, 31% of the population rent. So if all of a sudden that was being reported, that can really help them when it comes time that they want to own their own home. And that a lot of times is a reason people are turned down for credit, is not because they have bad credit, because they have no credit. They have no they're older and they have no history that they've been paying their bills on time. So it can really be a helpful thing. But just remember that your landlord will not do it automatically. You have to request that they start reporting. What about the optimal number of credit cards is 6 for a strong history? Do you think that's true or false? That is false. Really, there is no exact number of the right number of credit cards. Some people could go with no credit cards and still have a great credit report. But 1 or 2 cards, paid on time can definitely help build your credit. So these are the top 10 rules for managing your credit. Establish a credit report, and what that just means is borrow something so that all of a sudden you'll start having something on your credit report and it won't say no credit history found. Always pay as agreed. Pay your payments on time. Getting one credit card can really be a good source to start building up your credit. If you get denied, you apply for a visa and you get denied because of lack of credit history, you can always get a secured credit card, which would mean you pay the company $500. They'll hold that in an account for you, and then you'll have a credit limit of $500 on your credit card. So they kind of just have that as their insurance, that in case you didn't pay. And then after you go 6 months to a year, a lot of times they'll just reverse that and make it a regular credit card. So that's always a way. Or you can always get a secured loan at a bank where you're putting money, say holding it in a CD or stocks, and then getting a loan for that amount. And as you pay it back, the money is released from the account. And it shows up as a regular monthly payment and builds your credit. Use caution in closing accounts. That is an interesting thing because a lot of times you'll say, well, I have a credit card I haven't used. I'm just going to close it, kind of clean up my report. You think it's a good thing. But closing your accounts sometimes can cause your credit score to drop a little bit because it's making you have less credit available. So you don't want to go and clean up your report and close everything out all of a sudden if you're going to be going and applying for a loan in the next month, because that will drop your score. Applying for credit carefully so that you don't, go out. If you go out and apply get a new credit card, go look for a car, and shop around for a house all at the same time, that's going to set up a red flag to a lender and drop your score. So you want to be careful and watch what you're applying for. And even using your credit, if you're in the process of applying for a mortgage and it's around the holidays, you don't want to go out and start using your charge cards to buy all your presents, because that's going to have a negative impact, on your credit score. So time is key. The longer you have an account open and in good standings, the better. And demonstrating stability, having a plan. So if you know that you want to do something out in the future, start working towards it, paying maybe other bills down, trying to get anything that you might have that needs to get repaired, do it sooner than later so that when it comes time that you want to make that purchase, you're all set. And then, of course, share your knowledge with others. So credit scores are different than your credit report. The credit reports all the information is gathered by the credit bureaus. The scores are calculated by a different company. And here's a trick question. 0 is a perfect credit score. Of course, you're all going to say, no, I know my credit score has to be, in the 700s. But depending on what model you're using or the agency is using or the bank's using, 0 could be a perfect score. So what you have to do is really know the score that you're looking for. The most common score that lenders use is called the Fico Score, and that's probably the one that you're the most familiar with or have heard. But you want to be careful because other reporting agencies might be using a different score, and it could be misleading to you. So when you request your free credit report at annualcreditreport.com, they will ask you at that time if you want to get your credit score for an additional fee. A lot of people are curious as to what their score is, so they'll say yes. I would say really all you have to do first, I would get your credit report and look at it, and if it looks really good, you don't find any mistakes on there, you don't have any late payments and things. When you go to apply for a loan, the lender's going to pull your credit score, and then you can find out from them. We already know that is fiction. Paying an account immediately is not going to improve your credit score. They did put for now on there because they are working on changing that once you pay off a loan or a bad debt, that it will improve your score immediately. But now it doesn't improve it right away. It will over time, but not instantly. This is for your FICO score, which is the most common one, and this is how it's really calculated. The best is between 720 and 850. And the record of your paying your bills accounts for 35% of that score. So by paying your bills on time, all the time, and not having any past dues, that's going to give you the highest percentage. The total balance on your credit card and loans compared to your limit is the next highest, 30%. So what that means is if you have a credit card and the limit on it is $1,000, that's the maximum you can charge. If you charge that whole $1,000 on that card, maxed it out, you're not doing anything wrong because that's how much the credit card company has allowed you to charge. But it's going to have a negative impact on your score. They want you to keep your borrowing to only 30% of the limit. So, if you did charge the $500, they want you to bring it back down to only having $300 on that credit card in order to get the highest amount of points. So if you had 3 different cards and only 30%, you only use 30% of the credit on each one, would be better than one card using the whole amount. It would have a better impact on your credit score. The length of credit history. So for those of you who have had a loan for 3 years, an auto loan, and have paid it on time, that's great. If you've had a credit card that you've had for a number of years and haven't had any delinquencies on it, that's great. So the length of time. So that's why it's harder for new borrowers to get approved. Their numbers aren't going to be as high. New accounts and recent applications for credit, that is 10%, and that's where the inquiries come in. So if all of a sudden you're opening a bunch of new accounts, that's going to have a negative impact on your credit score. As you can see, it's not weighted as high as some of the others, but so you want to be careful when you're applying for things. And just, if you're in the process of applying for a car and all of a sudden you get this great credit card offer in the mail and you say, oh, I want to do that, you probably want to hold off and do that at another time. And then the mix of credit cards and loans. So that's really important too. If you have a mortgage, that's going to help improve your credit score, a mortgage, a credit card, an installment loan, which would be like a car payment, a regular monthly payment, a student loan that you're paying on time every month. That would be a good mix. So if you have a good mix, that's also going to make your score higher than if you just had all credit cards. What you want to be really careful about is when you go to sites and they say that you can have a credit score from them. Their credit score, the model they're using, is probably not going to be the FICO model that I just showed you. And what will happen is you might see that you have a good score with them and go to your lender and say, wait, I had like a 750, but they might pull it and the FICO score might only be 700. So they have this little, very tiny print down below saying, calculated on a plus score model. So there's a lot of different models out there. And so you have to be really careful and not, think, oh, wow, I have this really great credit score when it's not the same one that the banks are going to be using. Not that their method is wrong, it's just not the same one the lenders are going to be using. They might put, like the Vantage score takes a higher percentage of your on-time payments. So as opposed to 30%, they might use 35 or 40% weight on that area. So it's going to be a different number. So time is the key to having your credit score and your credit report all looking good. The longer you have everything and the longer you're paying things on time is going to be the better. You can't really fix the number, but there's different things you can do to help improve the number. And those things would be, just make sure you have a good balance of types of loans that you have on there. Don't close any accounts suddenly. Always try to keep a good balance between your credit limit and the amount of money you're borrowing on a revolving type card. You want to make sure that you check your credit report every year and make sure if there's anything wrong in that, you dispute it right away to get it cleared up, and that will improve your credit score too. And that's all I had.